Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTC QB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks for having me.
Crude oil has been having a very tough time. We were over $70 not that long ago. What's going on there?
And poof, all of a sudden it's at 12 months lows. Well, it's that 3-year cycle top in the commodity complex. You know, looking at the CRB index itself, we knew that the 3-year cycle top was due. And we knew that, you know, the evidence suggested that it peaked back in May, you know, as we moved into June, July. And we also knew that, consequently, that the rally in October was counter trend. At the same time, remember, we talked, and we had the corresponding high in crude oil in May, but then it made a slightly higher high in July. So as the broader commodity complex, you know, rolled over, that top held, crude oil, you know, it didn't want to give it up. It retested in July, and then it made a slightly higher high in October. And I think I said that, you know, hey, this last push up wasn't expected, but, you know, it still should be a final push into this higher degree cycle top. And so this is a perfect example of how a cycle can hang on and, you know, maybe be extended, take a little longer than the norm, but inevitably the cycle happens. And, you know, like you said, just like that, in the blink of an eye, all of a sudden we're literally at 12-month lows. And it's because, you know, the 3-year cycle, you know, the evidence suggested that the cycle was peaking. It finally did. It exhausted itself, and now it gave in. So that's what's happening there. While we're on commodities, gold, same thing. You know, we talked about that, the higher degree cycle top. Back in July of 16, it held on, and then finally it gave way as well. Now, we have had a counter-trend bounce. I know that stirred some of the bullish juices more recently, but we said it would be counter-trend, and, you know, it has, I think since the last time we talked, gold has weakened. Now, it hasn't caved in like crude oil yet, but the structure is there where it is possible, no doubt about it. So, in general, the commodity complex continues to be weak, and it's because of the higher degree cycle tops.
Tim, a lot of people have said if the stock market starts to really make a downward plunge, people will be reinterested in gold. Will that happen, or does it take a while for that to happen?
I think it's going to take a while for that to happen because the cycles are not lined up for that. You know, back in 2008, everything went down together, and I think that's the way the cycles are aligned here. It just, you know, I just don't see a meaningful bottom in gold. What I have been saying is that I think that there is a broader, higher degree, top forming in conjunction with this, I hate to even use the word because I've almost overused it, but this bubble environment that we're in, where all commodities, equities, pretty much all asset classes are peaking together, and that is setting up to all go down together, and that is actually what we have been seeing. I mean, we have seen, look at it, for the year, equities have basically gone nowhere. I've said that, you know, the U.S. markets were kind of providing camouflage for the higher degree setup that's been going on. We've seen cracks in the Canadian market and many of the other foreign markets, the Dow Jones World, the New York World Leaders, the NYSE itself. So we've seen a progression of these indexes and averages that have been leading, but with the industrials and the S&P kind of, you know, holding up, then it's like I said, it's provided cover for the setup that's going on. At the same time, we've seen the slow rollover in commodities with, of course, oil being a holdout there, but we've seen the rollover in commodities. And while equities have basically gone nowhere for the year at this point, we have a higher dollar, just like we talked about. We have lower gold prices, just like we talked about. And while crude oil held out a little longer than expected in making that 3-year cycle top, we now have lower oil prices. We're at 12-month low, which is exactly what we talked about with the rolling over of commodities. Equities are trying to set up, and that higher degree cycle top is still in the making. What we're seeing here with the price action in all these other areas is that higher degree setup is in fact on track. It is taking root, but it's taking forever. And again, the U.S. markets have been providing cover for what's setting up.
Do you think because things are happening in what appears to be slow motion that people are saying, oh, well, that's just a little minor correction, it'll pick up right away?
I think that's exactly what's going on. I think that this couldn't be a more dangerous environment because of that kind of thing. It has instilled complacency. I've made this comment before, and I've talked about it before, that, I said that when the rally out of the 09 low began, the longer it lasted, the more dangerous it would become. And like I said, I never imagined that we would see the kind of move that we've seen here, but that's exactly what has happened. The complacency is going to be people's worst enemy because they've been trained. I mean, my God, for 9 years, 10 years, whatever, 9 years to, buy the dip, everything's fine, Fed's got our back, and everything's good. And somehow we live in a new norm and a new paradigm, but that's not the case. It's, in reality, it is an extremity, and it's trying to set up for the correction out of this bubble.
We'll have more with Tim Wood right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, could you see us revisiting oil down into the 30s again?
I think it is possible. I do. I don't have a projection on this particular cycle, but knowing that the higher degree cycles have peaked and looking at some of the higher degree work, I think that is entirely possible. At this point, the guiding light, I guess I would say, is the structure of the market itself. We have intermediate and a little longer term sell signal now on crude oil. So you follow, the thing to do is just simply follow that until we get until it reverses. But yes, I think it is entirely possible that we could see oil back at that level. Now, I'm not saying it goes there, straight from here. Because actually there is an intermediate degree low due in some sort of a bounce. So, but yes, I think over time it could very well work its way that way in conjunction with these higher degree cycle tops that we know are in place now.
And we're not hearing any talk from the major oil producers of cutting back production to keep prices high this time.
Right, and that may come as price softens. That may come to try to get a bid in the market, if you will. But I'm not hearing any news at this point either.
Well, we also, as consumers, wonder when the price of oil plummets, how come we don't see a corresponding drop in prices at the gasoline pump?
That's a funny thing. That's an aggravating thing. And there's a word for that, but I can't repeat it probably on the radio show. But, you can have a storm living on the Gulf Coast. You can have a storm blow in, and immediately you see a jump at the pump when it hasn't affected anything. But when you get a decline like this, I mean, we're at 12-month lows, and the price around here of gasoline, it's only off 10, 15 cents from the highs. It hasn't begun to come down yet. So it's just, it's same old story. It all rolls downhill to the consumer, and the consumer's gonna take it on the chin at every chance. And it's just the same old thing. I mean, eventually what I do see in the States, or at least in my area, is that yes, eventually it takes a while for it to trickle down, but it's there, prices do adjust, with a big decline like this, and they will, but not immediately. It's always that way, always has been.
Well, one of the judges I used was when oil was nearly $150 a barrel, it was $1.50 a liter in the Vancouver area. So I thought, well, if the matchup is there, if it's $100, then it should be $1 a liter. And if it's $39 a barrel, it should be 39 cents. But you never see that.
No, and I don't know that you can do that exact comparison, but that may be a general guide. What I've noticed here in this area is that price should be somewhere. I've seen it as little as 50 cents, but somewhere around the 50 to 60 cents above, the spot price, I guess you would say. And right now, for example, the close as of yesterday, I shown gasoline was $1.56. So gasoline, using that 50 to 60 cents above that price, we should be just over $2, and we're still in the $2.40 to $2.50 range. So it absolutely takes a while. That's an easy. I mean, that's easy profit for the oil companies, I guess, or the oil distributors, or I don't know who's profiteering from that, but somebody is.
Yes, because here in Vancouver too, most of our gasoline, even though we have a local gasoline production facility, it sends perhaps most of its product to China. So we have to buy our gasoline from Cherry Point, Washington. And if there's even the threat of a storm, they'll boost the prices saying, well, the gasoline barges may not be able to make it to Vancouver. I've never heard of one of those barges never making it to Vancouver.
Yeah, it's just an avenue to fleece the consumer a little more.
We'll have more with Tim Cyclesman Wood right after this.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, the stock markets, equities, what's happening there?
Well, speaking of fleecing the consumer, look, I know that this, we've talked about this for a while, this bubble environment. And like I said, at the risk of overusing the word, but it is what it is. I can't call it anything else other than what it is. And it is a bubble. It's been a bubble. Trump talked about it being a bubble before he took office. But now all of a sudden, and I'm not playing politics here, again, it's true. But now all of a sudden, after he took office and the market took off, he took credit for it, and no longer was it a bubble. But no, we're dealing with the most, like I said, from just some simple technical tools, the most overbought market back in January since the 1800s. I mean, literally, I have the data, and I saw some of the most overbought technical readings since 1800. And, we talked about the valuation methods, and by any stretch of the imagination, any norm, when you stand back and look at this thing, it is without question the bubble that it is. And we have been watching, like I said, I've talked about this overall setup that's been trying to take place over the last year. It's been like worse than watching like paint dry, as they say. It has taken forever, granted. But it hasn't changed the fact that it is what it is. It is the bubble that it is. And we are seeing the cracks that we're seeing now in commodities is telling us that they're leading. The cracks that we have seen in some of the foreign markets, they're leading. And, it's taking time to take hold, but it's taking hold. And once it does, it's going to be the opportunity to be the unwinding of this. I don't know how we can see the unwinding begin and then it not be fulfilled. In other words, what I'm saying is that once the setup is solidified and the equities become under pressure, my thinking is that they're not going to be able to take that pressure and it probably more apt than not to just implode and then that be the unwinding of the bubble. And the unfortunate thing, like I said, is that it has taken so long that it has discredited people like myself and many of your guests, I'm sure, and other technical people and anybody with any sense of true market history that understands and the abnormality that we have been dealing with. It's just kind of because it's taken so long. It's like I said, lack of better words, it's been somewhat discrediting on that front. But I think the setup is on track, and that is. I'm rambling for my words here, but the setup is still taking form, and the unfortunate thing is because it has taken so long, people have become ever more complacent. They don't understand what's going on, and I maintain that it's going to be quite devastating once the thing takes hold.
What should people be doing if they're trying to ignore the advice they're getting from the television yell and sellers?
Well, a perfect example, and I'm not going to name names, but a perfect example. I saw it on the news where one of the mouthpieces came out and he was talking about buying the bank stocks, and that's exactly what is taking place here. That's the unfortunate thing about the fleecing of the people. That's the thing. Look. Banking, the bank index has been one of the leading indexes structurally that has been broken since the January high. Housing is another one. And so when I hear those things, look, these people, they're not idiots. They're liars. And to come out and say, well, so and so, some big name, he's recommending bank stocks, that's jawboning the market. Trying to put a bid under something. That's all that is. And so the public at the same time have been so, like I said, they've become so complacent by this, and then they hear this kind of stuff on TV. It's very unfortunate. And like I said, I think it's just all part of the environment, I guess, that we operate in, and it's going to take care of itself when the setup is finally solidified, and we're in that process. I think. I mean, we are in that process. This is a very risky juncture that we sit with this market at this time.
Jerome Powell has said the U.S. Fed is going to continue raising interest rates because it doesn't see any technical data that would indicate that they should ease off. But by the time most institutions get so-called technical data, hasn't the damage been done and things are well on their way to disaster? That's
the way it always seems to happen. Absolutely.
How come you have better access to information than they do?
I don't. I absolutely don't. I think it's a matter of, in many cases, misinformation that is presented. I don't have better information. All of these old-time technicians, many of which you interview, and some of the people that have been doing market analysis, technical analysis for 50 years see this for what it is. I talk to them routinely, and they have the same access to the same information. They know what a bubble it is why it's been fought so long.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to us to info@howstreet.com. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.